Hello, everyone, and welcome. Apologies, we seem to be having connectivity issues. Should be sorted by now. Welcome to Crypto 101, a show where I, Dion Cologne, will be hosting every Monday, and we will be exploring different topics in the crypto industry and explaining what they mean. This week, we are looking at acronyms that are often used in the crypto industry and usually on crypto Twitter and social media. To start off with, we are going to have a look at bulls versus bears. Now, bull and bear is not a term exclusive to crypto. In fact, they originated in the traditional finance sector. But what does it mean? If you buy an asset in anticipation of the price going up, then you're a bull. If an asset is going down, then you're a bear. It's as simple as that. Positive market conditions are considered bullish, whereas negative market conditions are considered bearish. So where do these terms come from? Well, it's quite simple. Think of how a bear attacks. A bear attacks by swiping its claws down and thus denoting a negative or downward trajectory, whereas a bull attacks thrusting its horns upwards and thus denoting an upward trajectory. It's as simple as that. Bear means down, bull means up. Next, we've got to the moon, or going to the moon. It's quite popular in the crypto industry, and you will no doubt come across it while you are exploring crypto Twitter or different social media platforms. For example, you may come across Bitcoin is going to moon, or a certain crypto or project is going to moon. What does it mean? It simply means that you believe in a particular crypto or project and that the price will increase over time, thus going upwards to the moon. Next, we've got WAGMI or NGMI. It's pretty simple, similar to bull and bear. One has a positive connotation, whereas the other has a negative connotation. WAGMI means we are all going to make it, whereas NGMI stands not going to make it. WAGMI is often used as a rallying cry by the community to promote good vibes. For example, hold on to your Bitcoin, guys. WAGMI, we're all going to make it. NGMI, for instance, will be used to express disappointment at someone's negative behavior or statement. For example, did you sell your Bitcoin at a lower price than you originally bought it at? You are NGMI, thus not going to make it. Next, we've got HODL. HODL is a pretty simple term that means that you are holding onto your crypto and not selling it during times of volatility. The etymology of the term is quite interesting. On December 18, 2013, at around 10 o'clock in the morning, a user named GameQB posted on Bitcoin Talk that I am hodling. Nowadays, however, the term stands for hold on for dear life. Thus, you are holding on to your crypto bags for the foreseeable future. Then we've got, once again, a positive and a negative. FUD and FOMO. FUD means fear, uncertainty, and doubt. If you're spreading negative information or a negative outlook on the current market conditions or the future of a certain project without any solid evidence or research, you are considered as spreading FUD or a FUDster. Whereas FOMO means fear of missing out. And this means investors have jumped on the bandwagon for the fear of missing out on possible huge gains moving forward. Then we've got paper hands versus diamond hands. Diamond hands is an investor who doesn't sell their coins no matter the conditions of the market, whereas paper hands is an investor who sells at the first sign of trouble. The origin is pretty straightforward. Diamonds are known to be tough, while paper is relatively weak and brittle. The term diamond hands originated in the Wall Street Bets subreddit, where it has been used since at least 2018, mostly as emojis. It became really popular in 2019 when the Wall Street Bets subreddit gained notoriety for pumping up meme stocks like GameStop. Next, we've got buy the dip or BTD. Usually, it's pretty simple and straightforward. When the price of a certain project dips or goes down, then you purchase it in hopes of making huge gains in the future. Buying the dip means purchasing an asset after it has dropped, and the logic behind that is that since it's dipped, you can get it for cheaper and hope that in the near future it will go up in price, and thus you will make some decent returns. Next, we've got ATH, which stands for all-time high, and ATL, which stands for all-time low. ATH is pretty simple. All-time high means the highest price that a crypto project has ever reached, whereas ATL, or all-time low, is the lowest price that a coin or token has ever reached. Another thing you will undoubtedly come across is NFA, or not financial advice. This is a term usually used by influential people in the crypto space when giving an opinion on a project, the current state of the market, and more. They state an opinion and use NFA as a sort of disclaimer to absolve themselves of any responsibility if their opinion is used to trade on. Then we have OTC, which stands for over-the-counter. These are transactions that are traditionally made off centralized or decentralized exchanges, usually through peer-to-peer transactions. Usually, these transactions are quite large, and you will see companies like MicroStrategy, for instance, purchase their large amounts of Bitcoin through an OTC platform. It's just much easier because traditional exchanges or decentralized exchanges simply don't have the liquidity to offer large amounts of a certain project or coin, crypto token, whatever you have, for the price that the buyer or seller may want. Thus, they use over-the-counter or OTC trading platforms. Next, we've got P2E, which stands for play to earn. It's pretty simple and straightforward. Play to earn platforms are usually games, and users earn rewards, usually crypto coins or tokens, by participating in activities on these platforms. Thus, if you play a game and win, for instance, or you are a long-term user of the platform, you earn tokens or coins, which you can then either hold on for a long period of time, or you can sell and thus reap your rewards. Next, we've got Rekt. Rekt is pretty much just a shorter spelling of the word Rekt, and it means that an investor has made enormous, incalculable losses. Usually this happens when there is a rug pull or a scam, or there is just a negative sentiment in the market for a certain coin or token. Moving on, we've got TVL, which stands for Total Value Locked, and this is usually used in ecosystem projects such as Ethereum or Solana, and it stands for Total Value Locked. It's used to describe the total amount of crypto being locked up and staked on a specific platform or protocol. Pretty simple and straightforward. Then we've got watch trading. Watch trading is where investors, usually large holders, create false trading activity on a specific asset on a platform by selling the crypto to themselves. So they would set a sell order and then use an alternative account to purchase that sell order, driving up the volume, which may lead investors to falsely believe that a project is going to moon. Finally, we've got whale, which is straightforward. Whales are big, and thus an investor in the crypto space or even in traditional finance that has a large amount of crypto assets is a whale, thus a big person or a big bag holder. That is all for today on Crypto 101. Please join us again next week as we explore different aspects of the crypto market and get you clued up on the basics. I'm John Guillaume, the head of PR and communication at Gate.io. Thank you for joining.